Hello friends, welcome to our lecture series on financial analytics. This is Aditya P. Tripathi. I am going to discuss today with you another interesting topic of financial analytics, that is data analytics in finance functions. We have different functions in the area of accounting and finance, and today we will understand where this data analytics stands vis-a-vis or in relation to finance functions. We have certain finance functions to perform, and how this data analytics is going to help me in this in performing or executing these functions. That is what is going to be our topic of discussion today. In due course of my analysis or discussion today, I'll tell you data analytics in financial functions. We'll talk about the application of artificial intelligence and machine learning in financial functions, and then we'll also talk about the key terms which are being used in the area of data analytics, or when we become very specific, I should say financial analytics. What are those key terms which we are using? So as a student of accounting and finance, we all should know that in completing or accomplishing our goal of different functions or different finance functions, where does this data analytics stands? What kind of benefit we can get from these tools or techniques of data analytics, or what you call as AI and ML. So data analytics in finance functions, it is basically a broad term, and whatever you perform, whatever activity you are performing in the area of accounting and finance, there is some tool, there is some technique which this analytics have for us. So the technology is there to help us, to assist us, and it is up to us that to what extent we are going to reap benefit out of this technology, which is very much available with us. So let us start with the data analytics in finance functions, and I would first be telling you about benchmarking. This is a very popular term when we talk about data analytics in finance functions. What is this benchmarking? Before that, we should know what is the expectation of industry at large. Most of the businesses, they wish to measure the performance of their company's products or services against their competitors. As a company, I want to know that where my product stands, where does my product stands in relation to that of my competitors or other complementing products, or against another complementing industry. So I just want to know as a business enterprise that where do we stand in terms of our sales, in terms of our profitability, in terms of our customer satisfaction. It can be any dimension. But suppose if we talk about as a person of accounting and finance, it can of course not be customer satisfaction. It will be the profitability, it will be the turnover, it will be the realization of amount, realization of our goals as a business enterprise. So we want to know, this is my objective, this is something which is there in the back of our mind, that we want to know where do we stand, and this benchmarking is here to help us with the best in class, or comparison is one of the most demanded exercise in the analysis. So we want to have a comparative chart, comparative analysis of our company, of our product or our services. So whatever is our requirement, accordingly we are doing a benchmarking exercise. And if you talk about the application of it, the tax departments, why I am calling it tax departments, because we have two different types of taxes or multiple taxes, direct tax and indirect tax, if we go to the broader classification. Even the tax departments and auditors, they have increasingly started using benchmarking, and they are comparing the profitability percentage with the industry standard, that what is your comparative profitability percentage with that of industry standard, what is your company's profitability in relation to your competitors. Suppose the industry standard is 20% of the profit on net sales, and your company is making a profit of say 10%, then they are going to tell you that this is the point where you are lacking. So you can compare the price charged to a sister concern with the market price. It can be anything, any kind of comparison. So this benchmarking is there to tell you the best in class, that where do I stand, and which company is best in class in your segment, which one is the best company, which one is the top performer. And of course, according to your requirement, it can be for sales, it can be for profit, it can be for number of customers, it can be for the market share, it can be for your debtors turnover ratio, it can be for your sales, it can be for your profitability. So any dimension with which you are going to conduct the analysis, benchmarking is one of the most important tool. So you can have a benchmarking exercise, and here comes the role of analytics. You can have a benchmarking done for your company, for your product, for your customers, for your sales. Now, there are different types of benchmark analysis. What are those? I am going to tell you. It can be an absolute number. For instance, you talk about turnover quantity sold. That what is my total amount of sales? What is my production capacity? What are the number of units you have sold out? So this is in terms of absolute number. It is not a relative one, it is absolute. So you are having a benchmark analysis for absolute numbers. For instance, your sales, your production capacity, your total amount of profit. It can also be in relative terms, like ratios. You can have a gross margin ratio, we can have a working capital ratio, we can have debtors day, creditors days, price to earning ratio, PEG, price earning growth ratio, we can have solvency, activity, profitability ratio. So when we want to have a relative benchmarking done for your company, for your product, for your services, then you resort to this kind of ratios where you do the benchmarking, but the base is not the absolute terms, it can be a ratio. Then the second one is the what is the motive behind doing this kind of benchmarking. Different people, they are doing different types of financial analysis for different purposes. My purpose is different when I am doing this kind of analysis. I am a customer, I am willing to know the cost effectiveness of a product. So of course my way of doing analysis will be different from that of a company which is looking for the profitability. And from the point of view of creditors, it can be different. But overall, holistically, if you ask me, I would say that there are three objectives of financial statement analysis. We want to know, number one, the financial position. We wish to know that what is the financial position of this company. Second is, what are the operating results of that company, that is in terms of their profitability, their operating profit. And third one is the cash flow. So these are three important objectives of any financial statement analysis, whether you are doing it for the purpose of your from the point of view of customers, or you're doing it from the point of view of investors or the creditors. These three objectives, they are very common. So you wish to know the financial position of the company, what is the position of asset liability of that company, what are the operating results, their position, and eventually the cash flow. Now, three major financial statements which we are analyzing for the purpose of benchmarking is the balance sheet, profit and loss account, and the statement of cash flow. And based on this, we are preparing a general framework of financial statement analysis, which consists of different types of analysis. Popularly, we call it SAP, solvency, activity, and profitability. But in addition to that, in some of the business enterprises, they can have capability analysis, they can have capital structure analysis, they can have their dividend payment analysis, that in last 5 years, how much dividend you have paid, and whether you are best in the class or not. What is where do you stand in relation to your other industry counterparts? What is your strategy and of paying dividend, whether you are the paymaster or you are the last one to pay. So you can have this kind of analysis. Best example of it can be the internal department of company, which is focusing on analyzing compliance with financial policies and standards. It can be capital appreciation, capital maintenance, allocation of sources, etc. Investors, they may focus on analyzing the profitability, use of funds, understanding investment returns, investment risks, and many more. Whereas creditors, they may focus on analyzing the solvency of the company, degree of financial security. So they may focus on solvency only, but you cannot deny to the fact that they look at profitability also. They look at your sales also. So solvency, activity, and profitability is something which is very common nowadays, and most of the companies, they are doing this kind of analysis, this kind of use of technology while performing this specific finance function. Now coming to the artificial intelligence and machine learning, what you call as AI and ML. In machine learning, what we are doing, we are using algorithms. By using these ML algorithms, AI solutions can of course consistently and continuously improve based on the information they collect. So when we are using ML algorithm, AI solutions, they are improving our results. Whatever information we are collecting, it is giving us the improved results, and they can analyze massive amount of data. They can give you a pattern, they can find a pattern that a human would never see. You cannot see that, because such a large pool of data is available there. You are dealing with massive amount of data, finding pattern out of that data, and then witnessing what can be the likely future performance is truly a difficult task for a human being to perform. And of course, after that, distributing data driven insight across the organization is next to impossible. So here comes the role of this technology, where this AI and ML can analyze the massive amount of data, and this is the reason why companies are increasingly using AI and ML for various functions. And I'll be telling you in due course of our discussion that what are those accounting functions. Earlier they were being performed by human being. There was a manpower for that. There was an employee for that to perform that activity, and now the machine is doing that, and in such a perfect manner that there is no substitute to that. Best example of it is the customer care of any online marketing site you are dealing with. They have chatbots there. They are asking you questions, number of questions they are asking. You think that somebody is asking. No, it is basically they are trying to read your requirement. Machine is trying to learn from you, and they try to find out the pattern, that what you are willing to ask. And sometimes they are giving answer to your queries, but of course out of their memory, if it is unsolved, still your problem is unsolved, they would escalate to you to customer care. So this is what it is doing. What is the benefit of it? It is reducing the number of customers approaching to customer care executive, and of course the cost of manpower is very high as compared to technology. So technology is coming to our rescue, and when it is for accounting and finance, of course nothing like that, because accounting itself is a very tedious task. You are dealing with massive amount of data, finding pattern, finding a data driven insight across the organization is of course a tedious and difficult task. So now I'll tell you application of this AI and ML in financial functions, that how it is being used in our financial functions. So let us first start with the first solution which it is providing. I'll not only be telling you where it is used, but I would tell you why it is being used. Most of the companies, they are willing to minimize fraud, and for that they are using technology. Now this machine learning allows for creating auto algorithms which processes large data, and they are helping you in finding hidden correlations between user behavior and the probability of fraudulent actions. So they are trying to find out or establish the correlation between what is the user behavior and what can be if behavior is this, they are giving you certain sets of user behavior, and then of course providing you the probability of fraudulent action, that if these are the sets of behavior, and out of this, in this specific set of behavior, the chances or the probability of fraudulent action will be very high. You cannot say that we are going to eliminate frauds in accounting and finance, or in case of financial frauds, but yes, of course we can minimize, we can have a control over it, we can check. In place of searching the large pool of data, we are only referring to those actions, those fraudulent actions where the probability of those actions being called as fraudulent is very high. So in place of reading say 10 lakh transactions, if I have to read only 10 transactions or 100 transactions, of course my time is going to be saved. So the financial services companies, they are using this technology to track the social media feeds. See, they are also using tracking social media feeds, the social behavior of their customers, and they are offering solution. They are predicting fraudulent intentions also. They are able to predict that, and this kind of analysis can help in reviewing expenses and vendor trends. I can give an example of it. A specific airline and a specific hotel, they are always booked by a particular employee. Suppose you have an employee who is every time whenever he or she is traveling, they are making use of specific airline or booking a specific hotel. It can be normal also. It can be a common practice, but it can get a red flag to the finance head, and necessary training or actions can be planned to minimize the fraudulent intentions, if any. If it is found, then of course that action can be taken. If it is normal, then there is no issue. But yes, the system will give you a red flag that see this transaction, this behavior of your employee is there is a red flag to it. It may be there, the probability of this transaction being fraudulent is very high. So you can minimize the frauds I have given you only one example. There can be number of examples. So machine is trying to learn the human behavior. So machine is behaving like a human being, just like we are observing a person. In place of we observing a person, the machine is observing a person. I was witnessing this kind of trend when I was chatting with a chatbot on a specific commercial website. I was trying to buy something, and there was some issue, and I was trying to talk. So the moment I got slow, I was not replying to their messages. There was a message that it seems you are away from the phone, and eventually I got a call. So they are trying to read you. The machine is reading you. There was no person. The machine is reading you, that what you are doing, what exactly is your expectation. So we can minimize frauds by the use of this technology of AI and ML. So for minimizing frauds, it can be used. Second one is credit worthiness assessment. We have to go for this kind of assessment, and for that also this technology is of immense help to us. ML can help lenders determine the credit worthiness of potential customers by analyzing their past spending behavior and their pattern. A system could identify how much credit should be extended to a given customer. The best example of it is whenever I make a big transaction, comparatively big transaction on my credit card, after making payment of that bill successfully, I got a message or a call from my banker that, see, you are being offered this much of personal loan without any paperwork, or your credit limit is being extended to a certain extent. Earlier I was having a specific limit, and eventually that limit started increasing without my request. So they were just confirming that whether you need or not, and if you need, they were confirming it. It was coming from where? It was stemming from the past spending behavior of mine, that in past this customer has spent this much of money and have paid successfully. So why not to offer extended credit? Why not to increase their credit facility? So this credit worthiness assessment is going online. We are as a customer, we may not witness, but the company is making good use of it. They are making use of ML to that extent that we are being offered. So there is no employee sitting there to analyze our spending behavior into our credit card bills, reading all the expenses. No, it is the machine which is reporting that this was the bill, it was paid successfully, customer should be given this kind of extension, the limit should be extended. So this is helping in lowering the risk to the financial institution. And it can be vice versa also, that there can be an instance where the customer spent big amount, and they could not pay. So their credit limit can be contracted also, it can be curtailed also. So this is going to help the financial institution lowering the risk of those institutions. They can reduce their risk from their clients, and they call it as credit worthiness assessment, and technology is of immense help for them. Next is predicting bad debts. I wish to predict my bad debts, that out of my total credit sales, how many customers are going to turn bad. AI is helping the finance professionals in predicting the status of collection well in advance, and they are doing a multivariate analysis of customers' data such as industry type, credit rating, product purchases, salesperson, order approver, history, and many more. There can be multiple variables, and they would provide you the forecast of the probability that, see, given all these components, this will be the possible outcome. So we can easily predict bad debts. Earlier what was happening? After the happening, we were giving a ratio that, see, past practice have been of 10% of debtors will turn bad, 10% of total debtors will turn bad, and we were making a provision for bad and doubtful debts. Now we can predict bad debts. So once I am able to predict bad debts, I can very easily put a control on that, and for that this technology is of immense help. The customer will pay on time or not, or the payment will be delayed, or they will not pay at all. So you can predict. Imagine that you can predict when you are doing a credit sale to a customer, you are having the credit worthiness assessment, and after assessing you can make a prediction that this customer is not going to pay back. The worthiness or the past record is not good. CIBIL score is coming from where? CIBIL score is nothing but your credit worthiness, which is being indicated by the technology. So it is a technology, whether you are taking loan from X bank or Y bank or Z bank, the CIBIL is having a data. Wherever you default, immediately it is being reported to a specific database, and you are being caught. So that institution can of course make a prediction of bad debt, and this was basically used effectively by the companies during the pandemic for planning their cash flow. During the pandemic of COVID-19, this prediction of bad debt was very essential it became very essential for the companies, because they were not able to plan for their cash flow. They could not have planned their cash flows without this beautiful use of technology in predicting bad debts. After talking about credit worthiness, bad debts, it can also be for process automation. There are a number of processes nowadays which are being automated. So ML and AI, when they are clubbed with robotics, the process automation helped in the placing and automating repetitive tasks. Nowadays in teaching also we say that if your task is repetitive, there is a great likely of that process being performed by a robot. So if I deliver the same lecture, if I solve the same numerical problem, it can be performed by a machine also. It can be performed by a robot also. So the robotic processes can go for process automation. So some examples of process automation I would like to give here. First one is of bank reconciliation. Earlier we were preparing bank reconciliation statement manually, but now it is no more required. Based on the data from the bank, the system can automatically give you a reconciliation certificate. They are giving you a report, and if no one-to-one entry is found, then it can prompt the possible entries. It can also prompt the possible entries against which the entry can be reconciled. So they are doing everything. They are passing a journal entry, they are doing the reconciliation and giving you a summarized report that see, this is your bank reconciliation report. So that comes under process automation. Another is automatic entries. The technology has the capability of getting the information from the bank accounts and passing a specific journal entry automatically related to bank charges, the collections received. So whatever is your transaction, if it is of repetitive in nature, it is just like you giving instruction to your banker that every month the payment of my mobile bill should be done. So you give a standing instruction, it will be automatically debited from your account. Unless you stop it, the machine will keep on doing it on a specific date. Just like your EMI deduction, there is a electronic clearing system, ECS. You have to only get validated once from your banker, from your bank account, and every month on a specific date that amount will be debited from your account, and it will automatically be credited to the other bank's account. So there is the automatic passing of journal entry in process automation. Even invoice approval can be done with the use of technology. When the invoice is received from the vendor, based on the rules and the history of the purchase order against which the invoice is received, the approval can be made automated. So there is no point waiting for somebody to authenticate it. System will automatically, the moment it is coming in the queue, it is being approved. And this is saving a lot of time for the senior team members, and their knowledge, their experience can be used for some other purposes. Now there are certain important terms which we should know when we talk about this AI and ML. What is database? We all know that it is when the data is stored in a database is in the form of table, it can be in the form of rows and columns, and of course that is database. MIS, when we talk about MIS, typically execute predefined queries on the database. You can run that query. Data warehouse, when we talk about data stored in a database in the form of tables, may then be moved to a staging area for transformation and then to data warehouse. Data stored in data warehouse is in the form of virtual multi-dimensional cubes, not in the form of tables, and typically the data in data warehouse is never parsed. As the more the data, the better will be the understanding of the hidden trends. That is what is the role of data warehouse. Artificial intelligence, many times students are asking, sir, we know that what it is, how to define it. It is basically a technology which enables a machine to simulate human behavior. It is simulating human behavior. That is why we call it, intelligence is there, but it is not natural, it is artificial. It is based on the experience of the tool rather than being clearly programmed. So unlike MIS, AI is basically expected to give answers to the random questions on data. ML, you should know what is machine learning. It is also a subset of AI. Unlike business intelligence, machine learning may be used for non-business purposes. Whereas when we talk about deep learning, nowadays we talk about deep learning, even one step ahead of machine learning. DL is basically a subset of machine learning which imitate the working of the human brain without human supervision. Imagine the role of technology which is being there, and it can process data and create patterns similar to that of human brain and use them in decision making. So it is also known as neural learning. Nowadays we talk about neural learning, which is used for detecting objects or recognizing speech or translating languages. So this is all about AI and ML in finance functions I wanted to tell you. I hope you must have learned many new things out of today's lecture of mine. Thank you so much.